There's a Fed official. She's the president of the San Francisco Fed, Mary Daly. She did an interview with the FT overnight, and she said that she thinks that the Delta variant poses a threat to the economy. So maybe they're going to find another. They're going to find another excuse. To just basically change the rules again. Extend the SLR, and then that repo thing will be solved. They're going to do more QE. Cut rates maybe to negative.
All right, we are back for Friday. M&M, the Mike and Mario show. Excited to be back. Mario, how you doing, my friend?
I'm doing well, and you, Mike?
I am doing excellent. It is Friday. Never goes bad when it's on Friday. It's looking forward to the weekend. Got a lot of stuff planned, so let's have some fun, man. So there's been more than enough stories that we're going to touch on tonight, and it seems like the overlying theme happens to be with the narrative that they're pushing surrounding inflation. So we're going to get into that, and as well, it's a live stream, so feel free to throw out a topic or two in the chat, and we'll try to touch on it and share our 2 cents on it, and just try to navigate these choppy waters we're in. So let me see if there's anybody tuning in thus far. We got a couple people. Dude Boy, Rude Boy, appreciate you guys for hanging out. Hit the thumbs up button, show your support for the channel, and hopefully more people get notified, because I'm hearing pretty good reviews about the show, Mario. So people definitely want to see us rant about these subject matters. So it's always good to
they need to share it with people they think might enjoy this.
Yeah.
So the more we share it, the better.
Yeah, and that's one of the things I try to really preach, is that there's no point in keeping this type of information to yourself. Like, I noticed that the community amongst those that are awake and aware is growing, but not fast enough to help other people prepare and embrace for the changes that's underway. So once again, once you know better, hopefully you do better. And so that means share so people can get plugged in as well. So, all right, so let's jump right into some articles, man. I got a lot of stuff on the screen here. We're going to start with, let's start with how about we start with the Twitter situation and concurrent former administration. How about we start with that one, just to kick things off? So it says Trump sues Twitter, Facebook, and Google. And then, of course, mainstream media had to throw in the fact that immediately begins fundraising off the effort. What are your thoughts on this, man? Like, how is this being received across the pond? Like, are people optimistic about this being something that will slow down the deep state or agenda, or what? What do you think, Mario?
Well, you don't hear much about Trump in the mainstream media, even though this morning I heard on talk radio, which is a fairly mainstream but quite contrarian radio. It's like a digital radio program. They're quite popular. They were talking about this. And personally, I saw the story. I saw it was being touched upon a few days ago, but I read about it. And I think it's encouraging, even though some people like you might think it's a distraction. But at least it looks like President Trump is trying to fight censorship, which affects all of us. Yeah. I mean, I made a video a few weeks ago, and I touched upon that thing that they're using, and they deleted my video. They gave me a warning, which I've never had in almost 6 years. So the fact that he's pushing for a class action suit against these people is encouraging, but of course there's other maybe reasons why he's doing that, and I'll leave that up to you to tell.
So not that I'm just such a pessimist that I don't think there's no good out there, but I want to, in my own opinion, be realistic in the fact that recognizing the overall agenda, and I've always questioned, the prior administration's overall involvement in this draining the swamp deep state, accusations he threw out there. We all know the corruption is just embedded. It's in my opinion, it's systemic evil that is in control of everything. So even though it looks good, it sounds good, I do hope that it gets some momentum and it's something that can come from this. But given a time frame of how there's more pressing issues at stake right now, to where this, I think, could be more of a false hopium to get a lot of Trump supporters excited that he's now coming back, he's attacking now. But yet, when you got big money like this, they can draw this thing on forever, I'm sure. And it'll just sit there as some good news that never really gets any development. And while we're all looking that way, more bad things are happening over here. And he could be a part of it. That's my only thing. So be open-minded. I tell people, there's no guy on a white horse coming in and save the day. And I like the fact that he's disrupting some things, but is it enough time to make it count for anything is my whole thing. So, yeah.
The thing is, if he, over 4 years, if he, when he was president, when he had the chance to change things, he wasn't really able to do it. It's very hard to see him doing it when he's not, right? And so I kind of agree with you. David Woloshak says it's all theater. He's probably right. He says Jesuits, Freemasons, Khazarian Mafia. I know. That's why I like that video from Larkin Rose. It's called about the plantation, that the Jones and Smith plantation. You should look it up. Larkin Rose on YouTube.
Is it like a cartoon, like a little animation? Okay, I saw it a while ago.
So
that's the thing. Like, we all know what time it is overall, and I might as well just touch on it. I sent you that article earlier about the 5 phases to the jab compliancy that was written by Natural News, and so it came across my radar today. And according to the 5 different stages that governments globally are pushing, according to the article, we're in phase 3, which is that voluntary / like incentive phase, where they're trying to lotteries and they're trying to give you all types of, college scholarships and all that stuff to incentivize you to do it. Because the first one was fear tactic. People took it because of fear. Second one was, what was this? You remember the second one? Without having me pull the article up, it was whatever the second one was. It was optional still. The third one is now the third one now. Second one was incentivizing. Third one now is the corporations and public officers and employers saying, now you got to do this in order to come back to work. Here in Michigan,
I saw that the Neo Kashkari, the guy who looks like a maniac, he's the president of the Minneapolis Fed. He's saying now that all the employees at the Minneapolis Fed, by August, if they're not, they won't be able to work there anymore.
Really? So, and that's why this is not even conspiratorial. This is not far left field to me. Like, they're setting a time frame for participation. And here in Michigan, there's a couple different healthcare facilities that said by September, you must or else. So that's that phase 3 as a part of that 5-step plan. And so step 4, step 5 get very dangerous, get very sketchy. And so to me, that right there is what's going on. So this Trump stuff over here is like, okay, what good is that?
Well,
I mean, it still serves a purpose, but
it helps the mainstream media because it gets a lot of coverage, and their viewership is probably down.
Yeah, it gives them something to talk about.
Miles gave you a super chat.
I see that.
He says, very concerned about Mario not stacking food. Here's 1 box of rice for Mario, 1 can of food for Billy. Well, that's going to Mike, Miles. So
So what I'll do is I'll try to find out a way to send you a box of food and some food for your animal. But so what is that about? So Mario, I'm not even sure. Do you talk about the extra preps as far as food stores and stuff like that as well? As much?
Yeah, not that much. But I'm gonna have someone on my channel probably not tomorrow, but next Saturday. You probably heard of him, Star Path Alliance. He's a Romanian guy who lives in the States, who goes over his experience during the Romanian hyperinflation in the 90s.
Yeah.
He's done really great work, and he's going to be on my channel. We're going to talk about that.
Yeah.
And he says that in a hyperinflation, gold and silver are good, but you need a lot more than that, like prepping.
Yeah.
And but he also says that you can't really panic and start doing too much all at once. You need to prepare over the long term.
Yeah.
But what he said is that a few things that you really need Just look at what you need regularly, like clothes. Buy clothes, he said. Have plenty of clothes, because he said if there's a hyperinflation, the shelves will be empty. It will be difficult to buy clothes. He said people got really expert at fixing their clothes, sewing and everything. He says, get some food, some canned food. You might not use it, but don't fill up the whole. He said in Romania they had big pantries. So, but he said the pantries in the US are really small. He said, people's walk-in cupboards are a lot bigger than their pantries in the US. While in Romania they had a lot of big pantries. He said that if you have some land, to start learning how to grow things as well. I have to admit, I'm not into that. I haven't done that because I live relatively in the city. But maybe we should think about moving more towards the countryside. But right now, I'm not in the position to do that.
Yeah. I've had some preppers, or preferably Alaska prepper, on as a live stream a while ago, and he was talking about, looking at your pantry as a savings account. And the way he laid it out made sense, because as this inflation narrative continues to pick up, and the scarcity of goods and services on the shelves become either more expensive or unavailable, the current canned good you bought yesterday next year could probably be worth that much more, or unavailable for the most. So where you've saved, you've actually appreciated in value as a savings mechanism. And if you want, you can save it or trade it or barter. So it's like, wow, I'm like, okay, I've always been grab a little bit extra. And then also on the emergency side of things, I've just been doing more things just because, especially when it comes to the stuff with longer shelf life, it don't hurt to have it as a reserve account, food reserve account for calories, in the future. So that's been something I'm interested in. So let's keep moving, man. For those that are tuning in, hit the thumbs up button, show your support, throw out a question, throw out a comment or something like that, and we'll go back and forth and try to answer them. And so here's something else in regards to, it says Twitter mocks CNBC article. The upside to inflation is rising wages. And so, of course, wages never rise anywhere near the actual nominal number of inflation. But I guess this just sounds good or something like that. What do you think, Mario?
It's just propaganda from CNBC. I mean, it's just ridiculous, because as you said, wages never keep up with inflation. And sometimes they do, but on the whole, the people who suffered the most from inflation are the general public. Here in the UK, in 2011, I think the conservative government passed a law called the triple lock. And this was to do with how much they're going to increase state pensions every year. And they said that the minimum increase was going to be 2.5%. Or if the CPI was higher than 2.5%. And then they said if average earnings is higher than 2.5%, we're going to use the highest rate. And this year, because of the lockdowns last year, they're going to take the year-on-year rate for earnings from July last year, and it's going to be like near 8%. So technically, they should give pensioners an 8% rise. Due to this law they passed and this promise of triple lock, they call it. But now they're going back on it because, only bankers are supposed to get big bonuses. I also noticed here in the UK when they had this G7 deal on minimal global tax, they exempted the City of London and the banks from that. So when it comes to the bankers, in the city or Wall Street, they can make huge, bonuses and increase their salaries. But when it comes to the general public, no, they're going to quash that. They're going to keep it as low as possible. What the good thing that inflation will be for is for government to write off the value of the debt. And the people who are going to lose out are wage earners, people on salaries, on fixed income, like pensioners or retirees, and also people who keep Federal Reserve notes or fiat money in their bank accounts, because that's going to lose purchasing power. So, CNBC, they don't know what they're talking about. But like you said, people see the headlines. They don't read the whole thing. They don't look into it. They don't ask questions. And they think it's a good thing.
Yeah. And one of the things that a lot of people who are not just, basically open to more than just their own current environment, their own country, when it comes to the boost in, wages in an inflationary environment, it's sold as a way of helping the people because, of course, as you mentioned, inflation is supposed to be good. The idea of inflation is good for the economy. I mean, it's growing, yada, yada. But yet in other nations where hyperinflation is a problem, here's an article here. Venezuela raises the minimum wage in fourth year of hyperinflation. And so they are raising the minimum wage at a time the currency is going down. And it always, the currency value, the currency always crashes faster than actually the purchasing power or whatever they're trying to give the people. So once again, this article here talks about minimum wage they increased the monthly minimum wage by 289%. And officials said on Saturday, moving from the equivalent of 64 US cents to $2.40. So once again, 64 cents, $2.40. I guess it might buy you an extra canned good if you can find it.
Yeah, I will add though that their inflation is probably rising by 1,000% a month.
Right.
So that's what Star Path Academy said in Romania. They were raising also the wages. But it never kept up with the inflation.
Yeah. And I think it's probably mathematically impossible because if it did keep up nominally, then that doesn't help the government with what they're trying to accomplish. So at the end of the day, the people always lose. And so I think Venezuela, any nation right now, if you probably Google high inflation, hyperinflation, we got the Lebanons, we got Syria, we got Zimbabwe. There's more nations that I'm actually keeping track of. I would imagine their governments are all responding in the same magnitude. Oh, let's raise, minimum wage and let's raise this to keep up with inflation while the currency is being destroyed. That's just creation of more worthless currency. But then to piggyback even more, why are they doing all this? I want to jump in quick with what you said.
Well, there's a comment here that I saw from David Woloshak. He said bail-ins coming.
Yeah.
I actually don't think they're going to have bail-ins because in a hyperinflation, the bail-in happens. They take your purchasing power. So they're not going to. If you have $10,000 in the bank, they're not going to take that. They're just going to rob you of your purchasing power through printing even more of it. So they don't even have to do a bail-in because in 5 years' time, that $10,000 will buy you $1,000 worth of goods. So that's how they do the bail-in.
Yeah. Yeah. And also speaking on that, I had a chance to interview a guy named Sean Richards, who's in your neck of the woods, and he was laid out a good case as to why he sees everything trending negative, with just with the bond yields as well as just overall interest rates because they're laying the framework for the CBDCs. And so I think like the Dodd-Frank Act basically laid in stone the legal framework for bail-ins if need be. So I think that there possibly could be a plan A, B, and C that has been set up to where bail-ins is something that could happen, or if something went that way, but then CBDCs is what they're going to ultimately bring us, which is ultimately, and he described it very well about the exchange rate of paper cash and CBDCs and stuff like that. So I think there could be multiple ways that they're going to try to do this, and they'll just pick and choose or go according to what the environment is. Because do you think, for example, that they knew that they were going to be announcing and launching the reverse repo facility? Do you think that was always a part of the plan as a counter to the repo market activity from 2 years ago?
I think it was probably more to do with the fact that they didn't extend the statutory leverage ratio. And so I think the Fed probably, they didn't extend that, and they probably knew that it was going to happen, this reverse repo. And they had to, that was probably one of the options. They thought, we'll have to open a facility because now the repo market, it used to be just private financial institutions lending to each other. It's like a pawn shop. You bring the treasuries or mortgage-backed securities and we'll give you the cash for a day. But now the Fed's getting involved. But I think they probably knew that once they didn't extend that SLR. But it's really difficult to say what's going to happen with this reverse repo. I mean, there's almost $1 trillion now in there.
Yeah.
And the thing with the CBDCs is, can you hear me?
Yeah, I got you. Yeah, I'm here.
Okay. Yeah, the thing with the CBDCs, yeah, I think these people actually don't even think that people will lose faith and confidence in the currency, because that's what hyperinflation is. People don't want the cash. They're going to keep spending.
Yeah.
They're going to get rid of everything. I think the central bankers and these people, they have no expectation that it could happen. And I think it could surprise them, the hyperinflation, the loss of confidence, even though, Star Path Academy says that it's not guaranteed that it could happen. We could just have very high inflation, which is not really hyperinflation. Pure hyperinflation is not based on costs or anything. It's based on people losing confidence in the currency. And once they do that, there's no stopping. Even if you raise wages, that gives people even more of a signal that there's something wrong with the currency.
Yeah. Yeah. And so for those tuning in, we are just having a little discussion on side effects of the piping of the monetary system going haywires. And so when you're talking about the reverse repo, first thing came to mind was this article that came out about Zoltan sees reverse repo hitting 2 trillion in weeks. What happens then? And so I didn't get a chance to dive into it, but my question would be, how high can that number go before something gives? Because I'd imagine the world's watching, and there's other nations that's also having issues with the piping of their monetary system. And so can this thing go on beyond this year? And that's why I think a lot of people are bracing for some type of correction in the market. And then to piggyback on that, did you happen to see circulating on the internet yesterday this little message here?
Yeah, I saw that today, actually.
What are your thoughts on this? Because according to this the June figures or July figure, June figures is going to be extremely problematic. That's coming out on Tuesday. Can this be some type of catalyst, you think, or what?
Well, I had a look at investing.com because they always have the expectation for those numbers.
Yeah.
And the economists and the market expects 4.5%. So I guess we're going to have to wait and see. That number comes out on Tuesday. That guy is supposedly a whistleblower from the BLS, saying it could come out in the high double digits.
Yeah.
Which high double digits could be 99%. I'm assuming it's high double digits after 10%, maybe in the teens, teens or high teens. I don't think that's probable.
Yeah,
I mean, it should be up there if you will.
It probably is in real terms if you use like John Williams shadow stats, like those type of figures, sure. But I don't think they're willing to give up control and let the truths leak out. But this is entertaining because I'm anticipating some type of activity. Because also I was trying to link in last night how the Cyber Polygon example or exercise just finished up today, and so how the website has changed. So perhaps if something comes out on Tuesday that's like market shattering, all of a sudden the power goes off, and it can really be on at that point. So
the other thing I wanted to make a point about is you're talking about the repo and the reverse repo, what's going to give. I don't know if I can share this.
Put it on. You can share your screen, or you can give it to me and I'll pop it up, whichever you want to do.
Here, let me see. So hold on.
And also, for those tuning in, hit the thumbs up button. Show your support for the channel. Throw out some questions or throw out some topics, and we'll try to touch on. Even though we got about 4 or 5 more topics to touch on. But
I'll send it. I'll send it to you.
Okay.
Basically, there's a Fed official. She's the president of the San Francisco Fed. Mary Daly. She did an interview with the FT overnight, and she said that she thinks that the Delta variant poses a threat to the economy. So maybe they're going to find another. They're going to find another excuse. To just basically change the rules again. Extend the SLR, and then that repo thing will be solved. They're going to do more QE, cut rates maybe to negative, whatever. So I mean, she is in the FOMC. She's a voting member.
Yeah.
She is she's an Uber dove, so to speak. But I found that fairly significant. I think it's the New York Fed is the biggest bank, regional bank, and I think after the New York Fed, it could be the San Francisco in terms of assets. So and the other thing about her, she's very diverse. She's the first women and gay Fed president.
Really?
There you go. I was reading on Wikipedia anyway.
Yeah. So so just how the narrative is now interlinked with the amount of participation as well as the different strands just being thrown at us.
Oh yeah,
go ahead.
If they see problems with the economy and stuff, they could wheel out one of these variants and just start another lockdown and bring everything down and pump it up again and bail out their friends again and everything.
And so the interlinking of the health scamdemic and monetary policy now is a part of their mandate now. So their additional mandate is to use the amount of participation. Man.
There's a question here.
Go ahead.
And Cooper, hi, Mike and Mario. When does the crack up boom happen? Well, and it happens when people lose confidence in the currency, and that happens when people lose confidence in the state, in the government, and I think it's getting very close. Not only here in the UK, but in the US, maybe in Europe. But when it starts, even if it doesn't start, I think with the inflation that we're going to have, they're going to keep pumping everything. It's still worth having physical gold and silver. But if you don't have physical gold and silver and the crack up boom starts, it's going to be too late. Once it starts, it's very hard to get, the people who have the gold and silver, they're going to hold on to it as long as they can. They're going to try to spend the bad money and keep the good money away, which is Gresham's law.
Now, speaking of which, I want to actually, let me see here. Let me get something. I want to share with you and talk a little bit about as you said, the fat bastard. So I want to play this little clip here as to what I believe the future holds with the CBDC and how the digital blockchain cryptography space, it plays a major role in this transition. So I'll actually play this and then share an article too, I think, that'll be more in line with what the ultimate agenda is down the line. So let me play this here, add this screen.
CBDC.
Yeah, let me go. I'll play this.
For the use of general use. For analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability. And also, we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
So that was
Elias Jones says he's a big boy. Yeah, that's why
that's a big boy. He's been eating good during lockdowns, but
a lot of burritos. I think he's from Mexico.
So watch this. So all that, 3 or 4 key things jumped out there. They want to deliberately put out the CBDC so that they can see everything that's being done, and then if they don't like what they see, they can control what you do with what.
They want total control. I mean, we're going to be slaves basically to the central banks if they, especially if you have all your wealth in this CBDC.
Right.
That's why I keep telling people, even if we get a CBDC, we just have to do even more than we do now with fiat currencies. Try to keep as much of our, productive, because basically money is like a surplus that you receive from your efforts. Try to keep as much of that out of the system.
Yeah.
We might even have to do more bartering instead of, dealing with these people.
Yeah.
But
Very true.
unfortunately, without this CBDC, you probably won't be able to do things like buying an airline ticket and doing a few other things.
Pay your bills. So all
pay your bills.
interaction within the matrix, within the system, from paying your monthly deductions out of your account, like insurance premiums, how bills, water, light, gas, going to be automatically deducted from your CBDC account. And if you don't have funds, then how will you get your funds to them? Checks will not be, they're no longer writing checks.
Oh, no,
They'll no
checks.
longer accept cash down the line. So your only option to keep your lights on and stuff, if you're still plugged in, is that you keep a nice little deposit of CBDCs in your wallet that they can automatically deduct.
Well, not only that, but you have to make sure you behave, right? Or else, social score. Social score like the Chinese do. I think they're going to do that. I mean, I haven't been watching the football here in Europe, the Euro Championships, but I did watch the last game. My wife and I did watch the England and Denmark game.
Yeah.
And I noticed all the advertising on the pitch, they're all mostly Chinese companies.
Yeah.
But we're told that the Chinese are the enemies. We have sanctions against them, but we're taking all their money.
Yeah.
So I think they're pushing us toward the social credit thing as well. And the other thing they can do is send universal basic income quite easily to a lot of people. That's going to debase the value of that CBDC even more.
Right.
And I think they're gonna back these UBI when they issue the UBI. Let's say the Fed issues UBI.
Yeah.
The Treasury will issue a perpetual bond, which is a bond that's never paid off, and to back that. So, and then the Fed will buy that from the Treasury and send it to you. So it's going to be really quick, and it's going to keep the economy going and going. They could also bring in negative rates. So if you have 100 CBDCs, if you don't spend it after a year, it's only going to be 90. So it's going to encourage people to spend. It's pretty, it's not a nice world. I think someone said here, who was it? What's his name? Rolf Steiner said, nothing short of armed revolution will end this now. And I'm not saying we should do that. I'm just reading what he said.
Right. So that's the thing, like resistance until the point where it becomes, sad enough physical. And that was playing into the 5 phases of participation we're talking about earlier. We're right now in phase 3, probably. 4th and 5th definitely is where they're going to become more assertive with, probably like looking to lay hands on people. And that's where it's not going to be just calm to just sit back and relax and just let things occur to you without responding, whatever that means. That's not even encouraging or promoting violence. We're just saying it's just self-defense, at some point. So
we got a super chat from Super Steamster.
RTD and Mario, get the uranium weight up. Great show.
It's a little dangerous to keep uranium at home, but I guess uranium stocks. Super Steamster actually sent me a few of these. They're like copper coins.
Yeah,
quite nice. And he sent me also a 1 ounce silver bar. Den of Thieves, and it's got the Mariner Eccles building, the Fed headquarters in Washington, D.C. Thank you again. He also made a golf shirt for me, which is really nice. Yeah.
Oh my good. He's blessing you. Seriously.
Yeah. Super Seamster. He's in California.
Oh man. All right. So we got a couple more stories and we can keep it moving, man. Of course, here's another article here that caught, that is just very right on time. Let me get rid of some stuff. I gotta remove this and then this will pop up.
Get rid of that fat bastard.
Yeah, the fat bastard add to stream. So here's more play into just the numbers. The Texas restaurant CEO says the price of chicken has rocketed from 55 a case to 118 amid the labor shortage. He's lost up to 20% of his workforce to larger chains. Interesting. So my question is, why that certain states have cut back on the extra funding for people not employed or whatever. But then I don't really buy into this labor shortage narrative. And so I don't think there's a bidding war, even though I see most places in my neck of the woods offering 15 now, but yet the push for 15 was a part of the equation well before now. And I don't think there's a bidding war for labor. Do you think that is, or this is just more of a narrative in the way they're spinning it?
I think what it is that's my opinion. I'm not saying it's that inflation is really bad. People's standard of living, people's purchasing power is going down.
Yeah.
And, what's the point of working for $10 or $12 an hour if you're not going to be able to survive? You're going to be out in the streets.
Yeah.
So people are just like on strike. They're not going to, they don't want to work for, to not make any money or not to live. So I think that's part of it. And they're using, of course, this crisis as an excuse, because there's shortage of this and shortage of that. But I think a little bit of it as well has been that people have been incentivized to stay at home and take the stimulus checks. I don't know when they will end. Here in the UK, you still have the furlough, and people keep doing these tests. And there's an NHS app that keeps telling them, oh, you were near someone who tested positive, so they won't go to work because of that. And I think it's a mixture of many things. And maybe also last year people realized that there's more important things than just going to work for nothing.
Right.
Maybe enjoying life a little more.
Right.
They're not as
not able to get as much bang for the buck. And what comes to mind when you're talking about the whole labor side of not being able to working for less, purchasing less, is just the whole concept of an affordable wage, affordable housing, affordable. Because of the inflation, because of the monetary policy and the amount of currency being created, it makes things unaffordable. So I can see how people are reassessing what they value in life, because unless you are in a good position, a lot of the things that you typically do, you just may not want to buy those things or go that route, to where it definitely leads people to reevaluate, their current living situation. So, but yet at this current moment, I don't think anything monetarily or fiscally done can make things more affordable.
They'll make it worse.
Exactly. Yeah. So people don't realize that.
Yeah. The Austrian School of Economics says that, the more they stimulate, the worse it gets. And, that's when you get the crack up boom, and people realize, wow, they've issued so much debt. It hasn't helped. The currency is becoming worth less and less. You look at the U.S. debt clock. The forecast for 4 years' time is that the national debt will reach 50 trillion. I mean, right now we're almost at 29 trillion. That's another thing I wanted to maybe mention here, is that the deadline for the debt ceiling, there's a debt ceiling suspension. They suspended it a few years ago under the previous president. And they need to do something about it by the end of July. That could be another problem for the markets. I remember in 2011, there was a debt ceiling crisis, and then S&P downgraded the U.S. Treasury. And gold went from like 1,400 to 2,000, almost 2,000. So that could be another problem here, the debt ceiling.
I think it's going to be a major problem, because I was ranting about this last night. Elizabeth Warren also, for whatever reason, has determined that July 28th is the deadline for her to have some type of framework for the cryptocurrency regulation as well. So it looks like July is a pinnacle month for all this activity here, because there's no clear answers. And then will they get bipartisanship cooperation to solve these issues? If not, then stuff could literally go haywire a lot faster, hinting into the whole cyber polygon activity, because if stuff gets out of control, instead of losing control of everything, you just shut it off.
I saw someone tweet in relation to the debt ceiling. They said, "Oh, Nancy Pelosi has asked for the debt ceiling to be raised to 100 trillion." It was a joke, but I thought she didn't ask. it was a joke, but that's the kind,
That'll be considered good news for them, because that'll just give them
Yeah.
a wide open paycheck to do any and everything. And no matter what, like these numbers here, even a 28.5 trillion, this seems kind of low in regards to all that's been done and created on the Fed side of things. It hasn't even been counted into this, I'd assume, to where no telling what the actual number is. But then you look at this the federal budget deficit here. This stuff is just going up. It can never go down.
The thing is, I think they're talking about a new variant, maybe another lockdown, because they know the economy is keeling over.
Mm-hmm.
And when the economy keels over, the federal intake of taxes goes down. It's going to make the deficit even worse.
Yeah.
So they have to find an excuse to print for the Fed to print even more and keep Uncle Sam, operating.
Yeah.
But maybe you could go forward 4 years and show how much it's going to be at that ceiling.
Okay, I can, but I'll do that. I'll go back to that in a second. But then here's their way of keeping things afloat. The infrastructure plan. So this is our next jolt of the economy, because as of now, I think this would be the fifth plan that they put forth, and what they only seen the last 30 to 60 days of just making things float a little bit. Things die down, dwindle down, then they need another jolt. So they're gonna be jolting more stimulus moving forward until this thing is just either kills over or they're ready to usher us into that next system that they have in mind. So
jolting Joe Biden. It's like jolting Joe DiMaggio.
All right, let me go back.
I don't think he's going to be jolting as much as jolting Joe DiMaggio.
Let me go back to that clock real quick. Let me find it. Here we go. Okay, so you said go ahead, go forward a couple years. Let me zoom out. All right, let me zoom out a little bit, and I'll find out where I can. All right, let me see here. Let me open this up.
Top right-hand side, yeah.
Yeah, let me zoom out.
Oh, yeah, there we go.
All right, dead clock time machine, go forward. Let's go to 2025. Let's see what we got here.
It's scary, actually. It's like a horror.
Ooh, 50. So here's the thing. I don't even think it's possible. I don't think it's possible to get to 50 trillion without there being some type of restructure, like between now and then. Because
that's the way I think as well. Because look at the debt to GDP would be at almost 200%, 180.
Yeah. So here's the thing. There's other nations watching as we do all this funny counterfeiting monopoly money creation. And of course, by this, if it was to get to this point, by this time, no government is holding on to government, U.S. government debt at all, because everything's been monetized directly by the Fed, and they're literally this is a rigged game system that's going to crash. So I would imagine the plug will be pulled before then, in my opinion. But
and I think Rolf Steiner, if you go down to the bottom right hand side, all the unfunded liabilities.
Yeah,
I mean it's crazy. This debt clock gives you a headache.
Yeah, man. But here's one of the things that's interesting: unfunded liabilities are 184 trillion. Social Security, Medicare, liability per citizen 532,000. But just look over here, though. We got the dollar to silver ratio.
I've never worked out how they work that one out, so I don't really. I mean, if there is a hyperinflation, according to Star Path Academy, you will be valuing gold versus other things, not the currency. It's a useless exercise.
Yeah.
But
that's and I'd imagine central banks and governments have already decoupled the dollar valuation of things and transferred it back to gold. And that's hence all the Basel III situation with the banks as well as Russia, China. They've already basically peg gold to their future.
Did you know that the BIS, it was created in 1930, and the share capital was in gold francs, Swiss francs, and up until maybe 5-10 years ago, might be a little more, the BIS kept all its books in gold. So it was in gold francs. They called it gold francs. So I wouldn't be surprised if they, because they know what money is.
Yeah. Yeah, they clearly do. Now, here's something to play along with that. Let me put this on the screen here. About I actually ran it about a little bit the other day, but it's official now that the Russian wealth fund has officially gotten out of their little holdings of dollars. And so here's a little something from RT that came out late last night, if I can zoom in. But it says Russia's national wealth fund is done with the dollar, as its structure is now 40% euro, 30% Chinese yuan, and 20% gold. The remainder consists of Japanese yen and British pound sterling. The decision was partly driven by the issue of sanctions. Okay, that's the underlying story, being used against the country. And my point I brought out was, if you got nations running from the dollar because of sanctions, the ultimate sanction is the theft of purchasing power upon we the people. So hopefully we're following suit in some capacity to what the Russians and Chinese and everybody else is doing.
Well, I mean, if I was the Russian National Wealth Fund, I'd have it the other way around. I have 70% in gold and 20% euro and 10% Chinese yuan.
Yeah,
so because the euro and the yuan are not going to be any better in terms of purchasing power than the dollar, I would say.
Now, so my just guessing these percentages here, they seem very skewed in nature because their gold holdings is really undisclosed, the true weight of their gold holdings. But I think to make this user friendly and use the word sanctions as the primary reason, they say 40 euro, 40, 30 Chinese yuan. Because at some point, I believe the Chinese yuan, whether it be the renminbi, the digital version, or the banking payment methods they're going to be using, will probably be pegged to gold, similar to the Shanghai gold oil futures exchange and whatnot. So gold is a part of the equation for those nations for sure. Now,
yeah, and I saw someone mention in an article, I forgot where it was, but they expect, I think it was someone from UBS. They did a survey of central banks, like view on reserve assets, and they think that the share of Chinese renminbi as central bank reserves is going to go up to like 15%, which is quite big. So I think, more and more countries are going to move towards out of the dollar. And I mean, if Russia and China can afford to do that because they're very powerful militarily, but if you're a small country, it's very hard because you can get whacked. Whacked. But they might have just started like a move that the Americans can't stop.
Right. Very true. And then also I'm not going to forget about the El Salvador move to incorporate an additional legal tender alongside the dollar. And of course, the question is what country's next. So I think by this month or next month, there'll be another announcement from another Latin American country, perhaps. And of course, to my knowledge, I haven't seen any pushback by the U.S. yet. And so I actually saw an article. What you going?
I saw something about the IMF that they're not very happy about it.
Yeah, and I think that was on initial announcement, but I don't know if they worked out because I think they borrowed $1 billion or something. I don't know how they're going to repay that back or whatever. But I was anticipating if this was a genuine move by the El Salvadoran president to help his people, then the U.S. will probably push back. But as of now, nothing mainstream has come about. But we also have until September 7th for that legal tender status to be officially made lawful in El Salvador. So I'm anticipating something between now and then. And if not, I think the Bitcoin agenda is a part of the plan as well. Oh, man. But let's get ready to, I guess, wind down a little bit, man. Mario, if anybody has any thoughts or questions you want to put out there real quick before we get ready for an exciting weekend. Here's a question. It says, let's say the government decides to print their way out of this and they sacrifice $1 and printer goes, brrr. What then? Does the Fed balance sheet just get erased and a new currency? Yeah. What do you think, Mr. Mario?
I think they're doing that already, aren't they? They're doing the brrr, or they've been doing it since 2008. They accelerated it last year. The Fed's balance sheet will only get erased when people lose faith and confidence in the currency, and you're going to see treasury yields explode higher. You know, when yields go higher, interest rates go higher, mortgage rates go higher, that's going to implode the Fed's balance sheet because their balance sheet value is dependent on the prices of those treasuries that they hold and mortgage-backed securities. Until that happens, you know, they can keep doing it. Treasury prices are quite elevated. But they do have a wild card. They have how many is it? I think 8,300 metric tons supposedly of gold certificates on their balance sheet, which they value at $42.22.
Yeah.
So they might have to revalue that gold that they hold. I think it's supposedly held at Fort Knox and West Point, but it's only valued at 42.22. So if their balance sheet were to implode, they could let the price of gold go to 30,000, and it would reliquify their balance sheet, and then they could start again.
Yeah. Now that right there will be more favorable for we the people, as people who hold precious metals, as to why I don't think they would even want to do that option. I don't think that's a part of their reset agenda.
Well, but they would only be able to operate again, if all the stuff that's supposed to back their balance sheet disappears, evaporates. The only thing they have left is they don't have any more credibility because people just don't want to deal with them. Gold could be the only thing left.
Here's so we got a couple questions. I'll get to them, but this jumped out right away. It says, NESARA, what do you all think? Did you follow the NESARA, GESARA?
I've heard about that for like 20 years. And people have always been pushing this. Oh, we're going to have NESARA in 6 months.
Yeah.
It's basically, I think NESARA is like changing the U.S. government and going back to the pre-United States corporation days, and going back to the rule of law or common law, and having sound money and no central banks. That would be great. Yeah. But it's if anyone was going to try NESARA, it would have been the previous president, and he didn't even get close to that.
Right. And that's the thing. I heard about it, followed it. People try to send me articles, and I know there's a couple influential YouTubers out there saying they knew exactly how things were going to play out. And that's why I was like, well, if they know so well, don't you think the people who are running and controlling the system also know very well to go around and distort anything from actually coming about that would be beneficial for the people? So that's why I was like, I wouldn't be sold on that, just because it gives false hopium. It gives people something to believe in, as opposed to being completely down and out, focusing on the negative. Like, it gives a sense of hope, and everybody wants hope. So I think it's easier to push and promote that type of message with there being no true evidence of anything like that being something that can be pulled off, especially when they made it quite clear where this is heading. And then, of course, you throw in the decentralized Bitcoin agenda. That right there plays even more into what they want, which is the cashless digital transformation. So, yeah. Somebody says it's a PSYOP.
Rolf Steiner says, why do people still not see that the Fed own the gold certificates that own the U.S. Treasury gold? Yeah, I agree with that. I mean, one solution would be basically for the Treasury to tell the Fed to go where the sun doesn't shine, and keep the gold, and say, your certificates are null and void.
Yeah.
But the Treasury is probably taken over by the bankers, unfortunately. So
clearly, every Treasury Secretary has been a banker. So it's been one of the, they filter in from the too big to fail banks to the Treasury to the Fed to the Fed to Treasury, back and forth. Then they end up as a private consultant for their own firm, scratching back. So, oh man. Okay, so let's get ready to dial down, man. We got a lot of thoughts out there. Appreciate everybody for taking time to join us as always. I hope you guys had a great time hanging out in the chat, as well as hearing the back and forth of us ranting and back and forth. And then also, for those that might be new, Manico64 on YouTube, go check them out. And then on my side, Rethinking a Dollar, anywhere you type in, I can be found, more than likely, for now. So other than that, man, let's just have a great weekend. Stay prayed up. Mario, let's leave on some good news. Give us a good message to sign us off with, if you don't mind.
Good news.
I'm always ask you that question. So you got to be prepared.
Yeah. No, good news is that despite everything, prospects of inflation or hyperinflation, collapse and everything, life goes on, and people keep going. People are resilient. People adapt. It's governments and kings and queens and emperors that collapse, but we keep going. We just need to batten down the hatches and have faith, and just keep going, like you said.
Yeah, very true. And so, big message for me today is gratitude. Today is Friday. Be grateful for what you have. If you have just enough, that's better than having none. And if you're watching this, more than likely you're part of the 1% of people that's awake and aware. So you're in a much better position than the other 99% that have no clue about what's really going on. So hopefully, as you are educated and find and dive deeper down the rabbit hole, you also share that information with other people, because once you know better, it's your responsibility, to help other people. And so that's my biggest thing. Just be grateful for what you have and just count your blessings, man, because as long as you're breathing air, there's still opportunity for you to continue to enjoy life and do well for other people. So that's all she wrote, people. Be blessed, be safe. We'll see you guys next Friday, Lord willing. Other than that, enjoy your weekend. Peace.
Bye-bye, everyone.